All right, welcome to my weekly review. You're looking at a daily chart of the Nasdaq. Last week was the last week of August, which was not a good month. And people, think it's, vacation time, it's dog days of summer, nothing's going on. We're in the doldrums in the last week of August, but man, there was a lot going on last week. Just wanted to review a little bit of the Nasdaq performance so far this year. We had the rally in January, and then the sell-off, which retraced half of that move. But then, this thing formed like a little cup with handle type pattern, and it broke out May 10th and made an 18% move to July 19th. And then we had the 9% pullback, the correction here, which is the pause that refreshes, a garden variety. This is textbook stuff right now. And if you look at 2003, we're mirroring exactly what happened 20 years ago. It's uncanny. But anyway, that's a topic for another show. The Nasdaq did rally. It had this pink rally day, and then it rallied back through its 50. And last Tuesday, we had a follow-through day where the Nasdaq was 1.74% advance with volume higher than the prior session. Then on Friday, we had a little pullback, but the thing closed above 14,000. And that's the first close there on Wednesday, I believe. First close above 14,000 in the month of August, since August 1st. So anyway, we'll take a step back, as Bobby and Phil used to say. And you can see that Nasdaq just looks like, first of all, this is a 37% haircut just because of higher interest rates. The earnings are still pretty good, but from peak to trough, that was 37% move. So people, will say, well, the Nasdaq's up, 25, 26% this year. So what? This thing was down 37%, still well off its high. And all it's really done, in my opinion, is just kind of formed a cup with handle pattern here. And we can see if it can get above this 14,646. And I never have to say in my opinion, because I'm the one who's saying it. So of course it's my opinion. But anyway, we take a step back there, and to me, the Nasdaq looks pretty good. And I don't have to say to me, because I'm the one saying it once again. The Russell 2000, people got excited on Friday because the Russell was, kind of the leading index. It was up while, the others were kind of struggling. It did rally through its 50. You can see there. And I'm going to show you a lot of charts. I'm going to show you some charts with this undercut and rally move with the Nasdaq, and now the Russell did. But I want this thing to get back above 200. And as Mick's saying, you can't always get what you want, but we get what we need. And please get above 2,000. That would be nice. The smaller stocks, the more riskier equities, if they could start getting some love and rallying, that would be broadening out of this rally. This just started last week. Anyway, I trade stocks, not indexes, so I'm going to get out of here, and I'm going to go with the Divine 9, which is the large mega cap technology stocks. And we have the good, the bad, and the ugly. I'm going to start with the good here. Apple just forming a base, undercut the 50 and rallied back above. So I like to see Apple lead. I don't know, I shouldn't say leading. I just like to see Apple strong because it's on, every index. And so if Apple's going well, the market's probably going to be doing okay. And you probably noticed last week that it was a little easier to trade with the tailwinds from the index. Google is another one that just formed a base, didn't even pull back to its 50 and made new highs last week. So that's another one of the good stocks. NVDA, it did undercut its 50 and it ran from 403 to 502. And then, people were wondering why it didn't go up on earnings. Well, all it did really was go up 100 points and retrace half that move, pulled back to 450 area, and now it's struggling with the 500 number. But all it's really done, though, is just kind of formed a little 7-week base here. And if this thing just wants to handle out here between 480 and 500, I think that would be great for a couple of weeks. But it's going to do what it wants to do. It doesn't care what I want it to do. So another one that I like and I include in the Divine 9 is Netflix. Once again, you have the undercut of the 500 and the rally back through. And Adobe, I include this one. It's part of the QQQ, 250 billion market cap, no slouch. could be a real winner in the AI race. This pulled back to its 50 and now made new highs last week. So those are some of the good stocks. Some of the bad stocks that I think could be doing better. I don't think this is good when you rally up to the 50. The index rallied through it, and this thing's getting met with resistance. This is Meta Platforms. So until it proves itself and can rally through with some power, this doesn't look good to me. And Microsoft, same thing. This is bad. This is a downtrending 50 moving average, downtrending 50, and it's meeting with resistance there. And the ugly, the good, the bad, and the ugly's got to be Tesla. Got the Matumbo treatment at the 50, just rejected. Yeah, pulled back to its 21, but anyway. All right, before I move on to our, I mentioned the undercut and rally stocks. I did want to go back to the Nasdaq and just point out, because people ask me about the power trend, and the power trend has to have 10 days with the low of the index above the 21, which is this pink line, which was downtrending and now it's trending higher. So you need to get these averages stacked. And we've only had 3 days where the low of the Nasdaq has been above the 21. So you got 7 more sessions where you can even think about the power trend. But anyway, thanks for the questions. I'm going to get to the drugs. To me, there's 2 drug stocks that I like, that I prefer, that are, in that, weight loss and diabetes space, which we know is a huge space, and that's Novo Nordisk. I know it's, highly valued at 425 billion market cap. It's got growth though, and there's stocks are, based in growth stocks are going to be evaluated on future growth, and this thing has a ton of future growth. So I don't question it. If this thing wants to trade higher, fine. If it crashes and burns, that's the way it goes. But if you just take a look at the monthly chart, and you can see what a big winner it's been, and there's not much to say there. I mean, it is highly valued, but I wouldn't say overvalued, because there's a lot of growth. This is Lilly, the other one, 528 billion market cap. It's got growth with its weight loss, diabetes play, drug, Mounjaro, and we'll just have to wait and see. The government's getting involved with these, Medicare, trying to cap the cost. So we'll just have to wait and see. It could be a benefit for these stocks, though, is it could open up more and more people to their drugs. Anyway, I'm going to take a look at the retail space, because I do like retail. This is ELF, pulled back to its 50. I've got support. This is well within character. This is what ELF does, right? It pulls back to its 50, gives you a little chance here and there, and then it rallied back up and made new highs last week. Very proud of the ELF with its new highs. Made an acquisition, and Wall Street liked the deal. Celsius is another one, taking market share, and they have a lot of opportunities overseas, and to, it's an energy drink, but they could have a hydrating drink that would compete with Gatorade. So there's a lot of avenues for new revenue streams for Celsius. Anyway, technically, this one just pulled back to, it broke out and then pulled back to its 10. Now it's following its moving averages. And then COCO is the last one in this little retail space. Yeah, I'm not going to do Lulu today. And this one, it's been forming a base, pulled back to its 21 within the base. So I kind of like that little shake out there. All right, I did mention Lulu. They had a strong report. Nice gap higher, 6% with, strong volume. So congrats to the long there. And we have to take a step back and look at the weekly chart. And you can see how this consolidated and this handle lasted for months. Very frustrating, but it made new highs on Friday. So congrats to the Lulu longs. And I'm going to get out of the retail space and go to the air conditioning, heating, HVAC, building. Very strong group. And Fix broke out of a base here and it's just trading with its moving averages higher. So, very strong stock, just quietly moving higher. This is one that, who's going to talk about HVAC? Yeah, I know it's only got 200,000 volume per day, but $185 stock. It meets the dollar requirements. And the other one was, I'm not going to do, I'm going to do Modine Manufacturing. This one broke out here. ran higher, then gapped higher again on earnings, pulled back to the 21 and just continues to make higher prices. So I like stocks that make new highs, and that one certainly is doing it. Now I got to go to the oil patch. PR, Permian Resources, after the bell on Friday was announced, they're entering the mid-cap 400, I believe. And, this could be part of that, the news, then, it's buy the rumor and the news comes, it sells off. So we're just gonna have to wait and see next week. But certainly it was on our watch list at MC Stock Charts, and it broke out. And I've just been holding this one. Kind of wish I had more. But anyway, another one that is joining the mid-cap 400 is Weatherford. Roughly a 6.5 billion market cap. And this one has broke out from its base and is running higher as well. Tidewater is one of the field services stocks. People were saying it was tired, broke out and ran, then it pulled back. Oh, it's a tired stock, it's going down. And then last week, boom, it's a weekly review. So I got to say, hey, 10.71% gains last week. So congrats to Tidewater Longs. That thing is a monster. And one more I wanted to show in this group is SDRL, which has been really strong. This is a driller, obviously, SDRL. And I'm going to go to the weekly chart here because you can see the consolidation and just the rip higher. And actually, it's just kind of waiting for its moving averages to catch up. Then it explodes higher. So maybe it'll pull back in the next few sessions and allow those moving averages to catch up. But that one is strong as well. The construction stocks. This is one that I own. I didn't chase it here as it gapped higher. It had a run of 3 or 4 days, made that high of 83, then pulled back to the moving average at 10 EMA. And that's where I was fortunate to get in. And it's been trading higher ever since. Sterling Infrastructure, definitely a strong stock. And Quanta Services. This one just formed like a little shelf, a little flat base pattern here at 206.43, pulled back to its moving average and now is ramped higher. I believe on Friday it was up to made a new high at 212.82. So just definitely a strong stock. And you can see, since the COVID days, it's gone from what, I think it was like 20 something to 20. So it's a 10 bagger essentially, right? Had a 4 or 5 weeks tight pattern in here. Yeah, 5 weeks tight. Now it's moving out of that. There's your 5 weeks tight, and now it's breaking away from that. Another one that I like in this area is Caterpillar, the machinery construction stocks, holding up well. I mean, it's pretty broad here with the stronger stocks. A lot of different areas. You can see this base, on base kind of pattern. Broke out. I believe that was an earnings, and pulled back a couple of weeks. Last week was up 5% after it pulled back to its 21. So Caterpillar looks good. Some of the data center plays that I like is Vertiv. I tried, I've said this many times how I blew it back here. Finally got into it after it ramped after earnings. Waited for it to kind of calm down, pull back to its moving averages, and got in it when it pulled back. And so it's been a good stock for me. Anyway, I wanted to talk about the one other one, SMCI. Got to talk about that one. SMCI, do not like to return to the scene of the crime, but I did last week after the follow-through day. You got to buy something, so I added on to current positions, but I also bought this thing. It did close above its 50 on Friday. I'm not holding out much hope. I would say a trade from like 275 to 300 be a good trade for me. I would expect it to have a little bit of problems here with that 300 level. You can see that it has been resistance in the past. So anyway, just had to mention that. SMCI, you could see on the weekly, this is a weekly review, how it had this big move, which is a little out of character, the trajectory change, and then the big sell-off that undercut the 50. So that was adios muchachos for me. I did mention the undercut and rally stocks that look like the indexes, and I'm going to get to those. And this is Builder First Source. This is a stock that I got into back in the 90 area, held it for a long time, and then it sliced its 50, and so I pulled it, and then it rallied last week. This is a weekly review, so I got to go to 15% move back through the 50s. So that should be back on our leading stocks. And this is kind of what stocks do. They go up and they go down. Shake people out. That is a classic shakeout right there. Just like the index, with the Nasdaq down so much. This is ACLS, another undercut. It was at 201, traded down to 157. That's a pretty sharp move. And then rallied back through. So if the Nasdaq was down 9%, this one went down 25%. So about 3 times the index, and that's what growth stocks do. And now it rallied back through its 50, and last week was up, 14%, while the Nasdaq was up 3%. So that's just the math on these growth stocks. I mean, they're going to outperform, but when they pull back, they're going to really underperform. They can cause a lot of pain. PDD, this is a stock in China. I don't own it or anything. I just want to note that, it did have this cup shape pattern, and it did undercut the 50 and then rallied back above really strongly last week, 29 or 30% move. So congrats to the longs there. Shopify, another stock that, is not one that I own, but it is. I just wanted to note that it is forming a base and undercut the 50 and now rallied back through. You can't kiss all the babies, but it is forming, a little bit of consolidation here once again. And it was up 20% last week. So congrats to the longs there. This is one, Arista Networks had it on our watch list for a long time, and it was just waiting for the indexes. You can see while the Nasdaq pulled back, this thing is just kind of trading sideways with its moving averages. It did undercut its 50, rallied back above, went sideways. And then last week, when the Nasdaq had its follow-through day, this thing was up more than 9%. So with the index up 3%, this thing went up 9%, right? So good week for ANET, AEHR, and this is just what it does, undercuts the 50 and rallies every time. So this time it went from $54 down to, I don't know what it was, 40 or below 40 here. Yeah, below 40, 38. So that was that nice little move there, right? So you sell here and then buy back again, then it's going to rip up probably to the 54.10 or higher, and then you're going to get another rug pull right underneath the 50, because that's what this thing does. If you can handle that, go for it. Great for swing traders, but it's a little much for me. But I do know I have some friends who like to trade that one. Another undercut and rally was LSCC in the semiconductor space. This is one of the fabulous stocks, which is with AMD and NVDA and Broadcom. And this one undercut its 50. You could see last week with the follow-through day ramped hard, and it was up nearly 10%. So nice move for Lattice. I still think this is, actionable and could appear on a watch or ready list here pretty soon. Monday, this is another undercut and rally move. Still setting up in a base, though. I mean, it's trading within a consolidation area there. So Monday I like as well. And the last one I'm going to do is Duolingo. This one had double bottom base and broke above its downtrend line, which I kind of like this stock. And this one still, to me, is actionable as well. This is not broken out of a base. But, there's the saying on Wall Street, the quick and the dead. So you got to be quick here. And if you're not early, you're late. Last week, it rallied back through its 50. It was up more than 10%. So that's it for me today. I do have one more thing. I did want to say, rest in peace to the great Jimmy Buffett. Raise a glass and margarita for him as he passed away last night, I guess. And I did want to mention, in the honor of Steve Jobs, one more thing. These big moves of 13% with big volume. These moves are not to be ignored. NTNX. See, Samsara closed near the high of the daily range, and this one did not. I was watching this and it kind of disappointed as it pulled back and closed at 33% of the daily range. So not as fond of that one, but still 12% move with 500% above average daily volume. That will not be ignored. And DELL is partying like it's 1999. Believe we have the bottom of the PC trough here, and things are looking up for the PC market, which should help Intel and AMD, but and Apple computers. But Dell definitely with a big move, 21%, big volume, closed in the upper half of the daily range. And also I wanted to show, so those three moves should not be ignored. I wanted to show some stocks that we had on our ready list last week at MC Stock Charts. It just broke out, big moves, 15% moves for MNSO Group. I don't know what they do. It's a retail company. They've got a lot of stores, and but anyway, so maybe some of you have been to their stores. I have not, but I had it on the watch list, and it made a big move. Fastly, same thing, broke out of a base, big move here, 10%. So, I hope some of you told me that you got into that. So congrats, I didn't, I missed it, but I'm glad somebody could benefit from some of these chart patterns. This is YETI. People think, YETI is kind of an old dead product, but and the consumer's dying, but this one broke out of a base as well, and it was up 9%. So another good stock for the folks at mcstockcharts.com. And the slow moving sloth Visa even broke out of its base last week and had a nice 3% move. So Visa, it's kind of a long-term, different type of animal, 462 billion market cap, but it made a nice move. NTRA is another one we had on our watch list for obvious reasons. You can see the chart pattern there, and it was up 9%, kind of a base on base pattern there. Nice move. And the last one is QLYS, software security. CrowdStrike had a nice report. This one had a big base, the bigger the base, the higher in space. And you can see the base here on the weekly. It is a weekly review, and it had a nice, nearly a 4% move. Still, actionable, it looks to me. So that could appear on our watch ready list again. So anyway, that's it for today. Thanks for watching my weekly review. Do your own due diligence, and remember to never, ever give up.